When it comes to tax planning, unfortunately, most Americans don't really have a sense of what that means. And the reason is because your average tax preparer never engage in proactive tax planning. So what exactly do we mean by tax planning? Well, it's one thing to prepare your tax return and file that, and the purpose for your tax return is to declare to the government what your liability is based on your calculations of your income. And then they're going to compare that to the information that they have regarding your income. And then there's a period of time where they can, possibly contest what you're declaring and what you've declared as opposed to their records. And if they choose to audit you, then, they have a period of time to do that, right? But there's kind of this dance that happens. And so when you do your tax return, the idea is that you can only declare what happened over the last year, what activities that you actually engaged in, where the income actually came from, and how the money was actually spent. We can't go back in time and change how those things happened. So when you sit down with your tax preparer, your tax professional, what they're going to help you to do is they're going to help you to look backwards and say, okay, how do we save you money based on your activities from the previous year? And how do we minimize the amount of tax exposure that you have to declare according to the law, right? And the tax code. Well, proactive tax planning is basically saying, okay, if we look forward to next year and we say, based on your current situation and what we can put in place and how we structure your entities and how the money flows, is there a way that we could possibly reduce your tax exposure of what you will be declaring on next year's taxes?